Hi everyone, I'm back, and in today's episode of Japan Property Notes, I'll be talking about something really important, the finance costs. Like what are the taxes involved, how much does it cost to purchase, how much does it cost to hold the property, and of course to exit as well in future. So this is really important. Pay attention, okay? I have a link in the description as well to my website where I have it all in further detail in written form. Okay, let's dive right in. First of all, the purchase cost. Number one is the down payment. Here, I've indicated 10% of the purchase price, but it's negotiable. It can be 5% also, which is quite a common figure. Do take note, this is only payable upon signing the sale and purchase agreement. Something unique for the Japan market, which is different from many other areas and in Singapore especially. In Singapore, when you make an offer, typically you give a deposit in exchange for the option to purchase. In Japan, the process-wise, which I'll cover in another video, the process is you make an offer, a purchase offer agreement. At this point of time, there is no contract and no payment. Only once this offer is accepted and the contract is prepared, then you will pay the down payment upon signing of this sale and purchase agreement. Something different, okay? Next, you need to pay the revenue stamp fee. For Singaporeans, we may know it more commonly as stamp duty. Okay, this is a tax on the essential documents. You can see for property values from about 10 million to 50 million, it's around 20,000 yen. 50 million to 100 million is around 60,000 yen. And for 100 million to 500 million, it's 100,000 yen. Now there is incentives, in fact, for people to transact more in real estate. So the actual stamp duty amounts are around half of the figures I've just mentioned. This is up to 31st of March 2027. Again, more details on my website. The third fee is brokerage fee, and this is a tiered figure, but there's a formula to understand it, as most purchases in Japan will be more than 4 million yen. The formula is 3% of the purchase price plus 60,000 yen, subject to consumption tax. The fourth fee is registration and license tax. This is a tax for the transfer of the ownership to you. Typically, it varies depending on the proportion of your house on the land value, or on the building's value itself. It can range from about 0.5% to 2% of the property price. In Japan, unlike in Singapore, where we have our conveyancing lawyer, we have almost an equivalent in Japan known as the judicial scrivener, right? These are the professionals who will overlook your transaction and verify the identity of the parties, the sellers and buyers. The fees depend on the complexity of the transaction. It can range from 50,000 yen for a simple buy and sell to up to 200,000 yen for perhaps commercial transactions that are more complicated. Costs might even go higher. The sixth cost here is the real estate acquisition tax. This is around 3% of the assessed value of the property. Very often the assessed value of the property is lower than your purchase price. So the actual percentage of your purchase price payable may be around 1.5 to 2%. Okay, this is often payable not at the time of purchase, but maybe around 6 to 9 months later when you receive a bill from the tax office. Next is holding costs. In Japan, if you take a mortgage, you have to pay mortgage processing fees, which is around 2.2% of your mortgage loan amount. There are also various fees such as your valuation fee, which is around 35,200 yen. Annually, you will need to pay your fixed asset tax and your city planning tax. Together is around 1.7% of the assessed property value. Of course, besides this, if you own a mansion unit, you will also have to pay maintenance fees, monthly maintenance fees, sinking fund fees equivalent, and sometimes for certain projects, you may need to pay things like internet access fees or garbage collection fees. The third category is if you're holding the property, you may likely, if you're an investor, you'll need to let your property out. When you let your property out, besides for paying the fees to your agency or your broker or your third-party management company, you will also be taxed on your income tax based on your rental received. Okay, so in my slides here, I have a table of the income tax rates. It's a progressive tax rate. So for anyone with a property that's equivalent worth of Singapore above 500,000 to maybe about 1 million, most likely you'll fall into the 10% income tax rate. Of course, this is progressive. There are deductions at every level. So again, please refer to my website where I have the full breakdown of the calculations. As a foreigner receiving rental income, you will also be subject to withholding tax, meaning to say that when the rent is transferred to you as a foreigner, some of it will be withheld. That amount is 20.42%. And then every year at around March, April, during the tax filing season, your tax representative would file the tax. And if your actual income tax payable is less than this 20.42%, you will get the return back as credits. Back to the letting and management costs. Of course, this may vary depending on the actual terms and the actual company used, but what we have found is that this is quite common, and also the vendor that we work with Tokyo Livable is known as Tokyo Housing Lease. They typically have two different kind of schemes. The first is a guaranteed rental scheme where they cover you the rental even if there's any vacancy period. However, the cost of that is 18% of the contract rent. The other more popular scheme, because Tokyo is a highly rentable city with high occupancy rates, there is a management fee of 5% or 8% of contract rents. Okay, the terms differ. Again, I will have another video and another article to talk more about this. Finally, disposal costs. Importantly, for capital gains tax, the rates differ by almost double depending on whether you hold the property for 5 years or less or beyond 5 years. Beyond 5 years, the rate is around 15.3%, and this is for non-residents. For residents, in fact, it's higher. Whereas if you hold for anything less than 5 years, the rate is 30.6%. And this is taxable on your profit gains, which in Japan, they will include your depreciation. So again, please visit my website for the detailed formula to calculate. Take note also, the 5 years, how they calculate it is from January of next year. I have an example as well on my website, which will give you much more clarity. Finally, there is inheritance tax, and this is something that many buyers that I've spoken to have actually raised concern about. I have a table of the rates there, but I think it's a big topic, and if you're really very wealthy and you want to really plan for your next generation using Japan as a base with its primarily freehold assets, I will be doing a separate video and article on inheritance tax because it's really important. I hope you find this video useful. I've come to the end. Leave me a like, give me a comment, let me know on any questions, and I'll be pleased to answer you. I'm Jim Tay. I'll see you in my next video.